Hey guys, welcome to another technical market breakdown here at Financial Hub, here at our YouTube channel. So today I'll be covering a few pairs as well. I'll just do two pairs, then Ken will come in and cover the other pairs. So basically what I'm looking at is Aussie Dollar. So this is Aussie Dollar long term. This is the weekly chart. So what we can see, what we're paying attention to. So we're basically just covering what we covered last week as well. Nothing much has changed. What I shared last week, for those people who have not watched that video, you can go and watch that video and understand where we are coming from. So we still have the same approach. So we have this downward trend line. Market has been respecting this sort of channel formation. And if you zoom in, what we're just having is we had this touch of the downward boundary of the channel. Market has been in an upward trend, almost that V-shaped recovery. Market has just been basically just going up. During this time we only had two red candlesticks, as you can see on the weekly chart. So we entered this region of support and resistance, sort of a ranging market. So what we had, market went and touched the upper end. As you can see, it was tested here, not once, not twice. It acted as support here. When market broke below, it acted as resistance. So that's the same thing that happened this time round. Market came, found resistance, and then shot back down. So currently what we're waiting for this touch of the lower end of the boundary of this ranging market, but market didn't touch it to the T, and we sort of having that upward momentum. So what I'm targeting is another bounce of this trend line. So that is what I'm looking at. I'm looking for market to break above this ranging market, this region, and go and touch that level. If you go down to the daily chart, there's nothing much on the daily chart. So what I'll just do, I'll jump straight into the 4-hour chart. And what you can see, this is basically what I'm watching. So we sort of have this channel formation on the daily chart, which is better seen on the 4-hour chart. So you just have this, I've just marked it A, B, bouncing off the boundaries of the channel to have that A, B, C. We sort of have this D, which wasn't touched to the T, but we can have that push to the upside, especially following yesterday's close. So we can see market close very bullish. So I'm just waiting for market to close above 0.69150, this level that you're seeing here. And if you go back, you can see it acted as a major key level. So you can see market respected here and it respected here. So we're waiting for that strong close above, and then we'll be looking for market to go and break these new highs and go and touch that trend line at the E level. If you go to the 4-hour chart, it simply magnifies it and you can see it much better. So this is what I'm having currently. As you can see also, market had this sort of Elliott wave analysis. So we had that 1, 2, we had that impulse third wave, 1, 2, 3, 4, 5, beautiful wave. We had that ABC correction forming our fourth wave in line with our 50% retracement. And now I'm currently looking, if these highs are broken, the highs above B. So I'm looking for B to be broken, this level. Actually, let me extend it from this region over here. So I'm looking for this level to be broken. If market gets that liquidity above this level, and as long as we remain above 0.690, then I'll be looking to remain long on this pair. As you can see, I'm already with that long trade, and that is what I'm looking at on Aussie Dollar. If the market comes back down, breaks below 0.690, then I'll be really cautious about this trade, because there's that probability that market can come back down, touch this trend line before we get that push to the upside. So at the same time, I'm cautious, but I'm really bullish on this one. So with that said, let me move on to USD CAD. So down to USD CAD, what are we looking at? Just like I said, like last week, we're confirming what happened last week. Last week market was mainly in a sideways movement, a consolidation, so nothing much has happened. So I'm still very bearish on USD CAD. As you can see, this is what we had last week. We had the double not last week, but a few weeks ago, we had that double top formation at that level. Market fell all the way to 1.330. We came shy of that level, but it's a very key level, and now market rebounded all the way up. We are looking for this liquidity zone. As you can see, I've highlighted as this previous. Market didn't touch it, but last week's close really shows that market is sort of having that weakness to the upside. A rule that we normally have here at Financial Hub is that we do not like to overestimate where the pullback is normally going to go. Many people overestimate it and they end up being caught on the wrong side of the market. It's best that you just follow the direction of the trend. So we're looking for this. We're looking for that region. Market didn't get that entry, so we sort of market turned at this level. And depending on how this week's close, we'll have a very, very good confirmation that we'll be either going down or we're still here to consolidate for a bit. So if you go down to the 1-day chart, you can see we've respected this channel formation. Market rebounded all the way back to 38.2. I talked about this on last week's video, and as you can see, we had that consolidation mainly the whole of last week. And now yesterday market opened with a lot of bearish momentum, and then now market seems to be gaining that momentum to go to the downside. However, if you go down to the 4-hour chart, we can see we're still within this ranging level. So we can see we're still ranging between this level I've highlighted, both with the blue line and the sort of maroonish reddish highlighted box region. So what I'm looking at, you can see I'm currently short as well. Market had this breakout. I entered yesterday at this short level together with a subscription group, and market today morning, after a few news from the United States, from Navarro, he mentioned something about the China trade talks with the US, which caused the market to have that spike today morning. And if you go down the 1-hour chart, you can clearly see it. So this is what we got. Markets short all the way up. We still did not nullify my analysis. What I was looking at, you can see we had a breakout. I was actually anticipating that retest, and now we had that retest, and I expect the market to break down below. The main key level you're watching before you enter this trade, if you want to enter, is wait for market to close below this highlighted region. As you can see, market previously bounced off many times. If we get that close to the downside, then we'll be pushing this market down to 1.33 level yet again, and after that we'll be aiming further down to 1.315. But the first target is 1.33 level. So that's basically what I have on this one. You can also see this was a trend line bounce. You can see we had this one bounce, second bounce, and third bounce. That is currently what we're watching. So if market is unable to break above this, I've kept my stops at a very good level, such that if market comes back up, I'll know early on that I'm wrong, and I'll be waiting for this main trend line bounce of the other blue line. As you can see, this 1, 2, then I'll be looking for this bounce, a better risk reward ratio. But currently I'm just flowing with the market. What the market is giving me is what I'm going with. So that's what I have for you guys this week. You can enter this trade, and now I'll leave the rest of the analysis to Ken, and we'll see you guys, and I'll see you guys next week.
So hi traders, how are you? For a long time I have not done any videos after Corona emerged. So we've been working from home, doing different tasks, but now we are coming back slowly, and you'll hear more from me. And I'm also planning other projects which will be launching soon. So once you do that again, you'll be able to actually even see me. So anyway, I'll go straight to the charts. I don't have much to say about what we are working on. The results will present themselves. So let's go straight to oil. I'll start with oil, then I'll look at Euro USD, and we can finally end our day by looking at Dow Jones, which is an index. I don't know if Caleb has covered it before, but I think he has not covered it, so I'll just use it one time, show you some crucial lessons that you can learn, and then we can move on. So this is the weekly chart on oil, and on the weekly chart you can see oil went all the way to zero. No one expected that. Very few people expected that. But if you look at it from a monthly perspective, yeah, you could have could have easily foreseen that oil will at least touch $10 or $15, because this was the pattern that was playing out. So once you are watching markets, always ask yourself what's happening. It's very important to understand what's happening in the big picture. So what happened was there was this slump, a pullback, and then this was the last slump. And I think this is the move, a breakout, and maybe oil will break out, create some new highs, but I will not look at that for now. Let's focus on what is happening currently. So on the weekly chart, oil is pricing in a move at least to $45 mark, and you can see we are trading at the 41.3. So the level we are looking for is the $45 mark first, before we get a reversal or before we get a correction. And on the daily chart, if I go down to the daily chart to show you what's happening here, so that's a break above R2, a break above a major level, the $40 mark, and now we're heading for 45. So what happened was oil came back we had a move to 40. We capped the $40 mark, had a correction to 35, and now we are pricing in the move, the extension to $35 mark, which is the next, to $45 mark, which is the next upside target. So how can you capitalize on this move? Finding the entry if you have not executed a trade yet in this direction is quite a hassle, because you're trying to look for good risk-reward ratios. That's the main idea when you're trading. We're not trying to be right, we're trying to look for good risk-reward ratios. So let's watch what will be happening at 42.5. If we can get a slight correction to 40, maybe we can come in for longs at all the way to 45. If you get a straight leg all the way to 45, we can look for the short from 45, since at that point a short will be highly favorable. So if you have not taken this trade yet, you can stay out, watch for what I said. You can watch 42.5, maybe you'll get a correction to 40, then you'll get the extension, or you can wait for 45 for you to execute a short trade, but I think this will be covered next week. So let's wait and let's watch what will be happening. So that's my outlook on oil. Next, I will look at Euro USD from a weekly chart perspective. So Euro USD, for the last 2 weeks I've been expecting a collapse, and I've not changed my bias yet. You can see I actually have a long-term trade that I've executed. I'm looking forward for a collapse all the way to 1.05, but again, I could be wrong. I've been wrong a couple of times, and this could be one of those times I'm wrong. So what am I looking for? From the weekly chart, that's all I have for now. I don't have any other bias. But on the daily chart, something else is popping. So we had this channel formation. So we had the first move, a pullback, and then we had this move, and then we had this drop. So if today we can manage to get a close below 1.1250, if this was just a false breakout, and you get a move below 1.1250, then I can be looking for a drop all the way to 1.107, 1.1, let's just say 1.1 level. But if I go down to the 4-hour chart, then you get the other perspective that I have. So the other perspective that I have is that this was the first bounce, second bounce, and this was the third bounce. If I label this with the Elliott wave patterns that Caleb normally uses, then this becomes 0, this becomes 1, this becomes 2, this becomes 3, and then this becomes 4, and now probably we are pricing in with 5 all the way to 1.15. But for me to execute that long position, I'd want at least first a close above the 1.13 mark, so this close. I'd want this close, and further confirmation can be brought about by the close of this position. A failure to do that and a move below P will send these markets collapsing lower all the way to the 1.1 mark that I talked about earlier. But let's wait and see what will be happening, because if I go down to the hourly, many of the patterns that I was watching have been broken or have been taken out. So initially I had these trend lines which were dropping all the way from this point, and they have been taken out. So I had these channels, I had this trend line, you can see it has taken out a retest, and now we have a continuation. So if you get a break above this, then one, I liquidate the short positions I have, and if you still get a confirmation higher, then you can jump long and look for the 1.150. So markets are all about probabilities. At least I've shared with you the probabilities that I'm watching, and that's my outlook on Euro USD. However, the big picture tells me that I should be more inclined to be bearish than bullish. But again, you can't discount what's happening on the smaller time frames, because that's what will build up ultimately to the big picture. So a balance between the two is critical, and for now I'm sitting on the fence. Just like you can hear from my tone, from my outlook, I'm sitting on my fence. I'm sitting on the fence. I don't have any outlook that is suggestive. So let's wait and see, let's be patient, then you can decide when and where to position our money. So that's all on Euro USD, and now I'll jump to the last asset that I look at, Dow Jones. So the next asset that I look at, this is an asset, it's called Dow Jones for those who don't know. It's an accumulation of 30 of the best indexes in the United States, and since we trade markets, we normally look at very many assets, and we try and look at where volume is, where volatility is, because that's our main job as traders. And it's simple, like we look for risk and look for how to manage that risk. So now most of the risk is contained in these stocks because of what is happening, COVID-19, and I think we are in a bear market. So if you know the different markets we have a ranging market, a bull market, and a bear market. and this is a bear market. Bear markets are often volatile. We have covered all these things in our course, so if you're interested in learning how to do some of these things, how to understand the big picture of trading, not just the simple things that many people teach out here, which is just the technicals, then you can consider purchasing one of our courses or even enrolling in the subscription, where we share more about why we are looking at certain things and how they are playing out. So anyway, so if you look at it from a weekly chart perspective, which gives me a perspective of probably the last 4 or 5 years. So if you look at it from 2018 all the way to 2020, 2019, 2020, this thing was consolidating basically between 22,000 and the 27,000. Then we had this breakout in late 2019, and this move was capped in February at the 29,500 mark. So if you study markets, if you look at history, we often get such consolidations. We get a false breakout which traps many people into longs, and then you get this collapse, the first collapse, which sends market lower. And we often don't know what triggers some of these collapses. So apparently this year it was COVID-19, a pandemic, which sent economies into shambles, recessions, and many companies into bankruptcies. So the collapse took us all the way to 18,000, this for me is the first stage of the bear market. This was a pullback, and now the second wave is coming. The second wave of the bear market, which is this one, is coming. So what am I looking for? You can see for the past 2 weeks we tried going above 27,000 and we failed terribly to do that. And I'm looking for a collapse to take place from this level to send us lower. So I'm looking for it to sink down all the way to 14,000 ultimately. But for now, let's wait for markets to play out. So if I go down to the daily chart, I executed some short positions, and for me here, I'm trading. I'm not holding these positions long term, so I come in and out. I just want to know the long term direction, and then I look for entries and exits in the direction of the trends when the odds are bending to my side. So if you look at this one, the first short executed was this drop. I came out last week when the week was beginning at 24,500, and now we're in a pullback phase. So on the 4-hour chart, you can get a precise explanation of the pullback. So we have patterns called the Gartley pattern, and this is one of them. So what normally happens is you get a pullback in the form of an ABCD, and yeah, I'm looking for 27,200 to be spiked by this market before we get this drop down lower again. So the real trade for me, I'm in this long trade, but for you the risk reward will not be favorable. So for me, the real trade now, the trade that I want to share with you, the one that will give you money, the one that will make you rich, the deal breaker is this trade. So this is the trade that will give you money. Risk reward 1:3.7. If you use tighter stops, you can get a risk reward of 1:5.8, and I don't expect markets to touch this level. If you get a break past this level, then you can see markets going all the way to this level before tumbling lower. But for now, I don't see any way we can create new highs with what is going on around the world. That is still not priced in these markets. In fact, the risks are higher that we'll get a move lower. So that's why I decided to share with you this trade, because we don't do this only for you to make money, but we also want to educate you on what is happening around the world. So yeah, that's my outlook. I'm looking for 78.6, and then you can get this extension to 23,000, 23,500, and that will be done for the week. So this is my favorite trade actually for the week, and I'll leave it at that. So hopefully you guys will make some tips out of what we're doing. Buy our book again and learn how to trade. We've covered some of these things in the book. We've covered more of this, almost everything that we talk about in our course programs, and you can consider enrolling in one of those things if you're interested in learning how to trade and trading long term, not gambling but trading long term. So that's it from me. I hope to hear from you guys, and I'll see you next time. So cheers guys, may the pips be with you. Economic recession and a bear market.
This is the time we tell you people to sit tight and watch the markets closely.